We're live.
Are you sure?
No, had to hack space and time. It's all a bit weird. We're there. We're way late. Sorry, folks. 45 minutes late. It's 11:15 on the west coast. I don't even know what that makes it. 2:15 on the
This is
east
the
coast.
level of excellence that you've come to expect from this crew.
That's right.
Uh,
Don't come here looking for tech savvy.
I'm totally spent trying to put.
Listen, I know we need merch. There is a part of me, this is embarrassing to admit. I know that I seem like a man that has all this shit together. I have no idea how to run an internet store. I am embarrassed of failing and having a terrible looking store. It's part of why it's not done. It's an unacceptable answer, but it's honest. So that is it.
It's hard to imagine how we missed Fang if with this tech skill.
Oh, I'm totally spent after trying to hack the back end of this beast. So I think
Toby's got flop sweat for days right now.
Yeah, he came in here sweaty, and after all this, it's just you're gonna need water.
Shot. Yeah.
We might as well go into the intro, I guess.
Yeah,
huh?
let's do it.
Yeah.
This is Value After Hours. I'm one of your hosts, Bill Brewster, here with my esteemed colleagues, Jake Taylor and Toby Carlisle. Jake, what are you going to be talking about today?
I'm going to cover slime molds and capital allocation.
Alrighty, I've seen some of those companies in the past. And Toby, you'll be talking about?
Yeah, so Masa Son has gone absolutely bananas. He's had this monster bet on a variety of stocks. I don't know exactly, but they mentioned in the article that I read Amazon, Netflix, and Microsoft. He's had a $50 billion notional, which is like $4 billion in premium and calls, on top of the $4 billion in stock that he owns. Absolutely swung for the fences, which, just like Buffett tells you to do when you get a little bit behind, just go for it on margin.
Double down.
In the options, swing for it, and if you blow up, then that's what happens. No, he doesn't say that at all.
I think that was
that was the 83 letter.
Yeah.
Okay. Yeah. I was trying to figure that one out. And I'm going to talk a little bit about creativity in the equity market. So, with that, who wants to start? Toby, let's get the good stuff.
Yeah, let's talk Masa. So,
Masa.
There's been an enormous amount of option speculation in some of the frothier names and some of the techier names, and there's been this the whale, the Nasdaq whale, and nobody really knew who or what the Nasdaq whale was. One of the conspiracy theories was it's an associate of Musk's, putting these gigantic calls in way above the market in Tesla stock, which makes there's some delta hedging. So if you're the person on the other side of that call, if you're a market maker and or you're a bank or someone and you've made that call, in order to hedge yourself, you have to get long the stock, which in turn pushes the stock up, and it's this self-reinforcing cycle.
Okay, and taking a step back, Toby, that's because when you are selling the calls to the counterparty, you're negative the delta, so you buy the stock to offset your negative exposure.
Right, you're
correct?
hedging yourself. That's right.
There you go.
And so if somebody big comes to a bank and says, I want to do this big option trade, you can't turn them away. You've got to take the other side of that bet. You've got to try and lay it off as much as you possibly can, and one of the ways is by buying the stock long. So there was this conspiracy theory. It's clearly now been shown that it was probably Masa in there buying, but it's Masa with a whole lot of Robinhood behind him. So Masa's like $4 billion long, but then Robinhood is like another $50 billion, not in the notional, $50 billion in premium. So like he's a big portion of that market, but not that entire market. But it's come out on Friday in the Wall Street Journal and a few other places that he's the one who's been behind all of this. Presumably because he got a little bit behind. He's had WeWork and a few other little, stubbed his toe on a few other things, and maybe he's trying to play catch up. And so one of the comments that I saw that I thought was kind of interesting was Massa's not so much a tech visionary as a speculator. Do you think that's fair, given this latest trade?
Ooh, I don't know. I'm not gonna. Whoever that is on the Twitter machine that goes under Masa Sun Cap, I'm not trying to make enemies.
You think that's Masa?
I don't know. I have no idea. It's that's certainly, it feels Icarus-y, doesn't it?
I feel like we have to know a lot more about strikes and before we can say a whole lot, right? Like
We're on a pod,
we don't
dude.
know where they're. I know. You just got to speculate wildly.
Hot takes.
There was also some suggestion that he might have sold some calls to get into those positions. So you sell the calls further out of the money, and so that's where you would sell the stock, presumably, and so you kind of fund the calls a little bit, which is a pretty smart trade. Like that's not, and there's no reason why
vertical spread for those at home.
There's no reason why putting those trades on isn't a good trade. It's just it's
Match month,
size.
there was different durations.
Didn't have the detail in the article that I
Come
read.
on, Wall Street Journal. Come on. Yeah, I don't know, man. I don't know. That options market, that's some scary shit if you don't know what you're doing.
I think
So
it's
I
scary
told
if you do know what you're doing.
Yeah, no doubt. No doubt. I had a buddy that called me up, and he's like, I think this stock's going up, and I'm going to buy the calls. I said, do you have any idea what happens if volatility comes in on you on that stock? And he was like, what's that? I said, don't do it. Do not do it. You're paying a lot for the air there.
Yeah, well, there's
That brings up a good point, though. Like, Tesla today now is, I don't know what the latest is, but off 16 or 17%.
it's back to where it was
or
on like
something.
11 August. It's back to where it was a
Yeah,
month ago.
But I think, there's a lot of potential for, schadenfreude in this game. And I think we would be doing a good service if we encourage people not to take too many victory laps here. And yeah, I mean, I honestly, you can kind of feel bad for the people, even though I know there was like a lot of overconfidence going into it and a lot of like kind of YOLO, which seemed like.
Bro, are we saying that people are dunking on people because of one day? Because last time I checked, it's still doubled since February 21st, which was a pretty high point.
Yeah, but there's probably a lot of people who are in calls there that are going to expire. And
Yeah, no doubt.
They thought it was going to keep going. And that, like, those are going to be huge losses and probably more likely like money that those people actually needed. So I'm just saying, like, here's a chance to be a little bit more compassionate human and, not feel. This game is humbling, and unfortunately, some people are going to be learning that the hard way. So let's try to like lift each other up instead of just tear each other down.
This is part of what my beef is with my perception of Robinhood's fundamental product, right? My perception, which is not truth, but it's perception, is that they tend to benefit from driving a little bit riskier behaviors, such as margin loans and trading options. And people that don't know what they're doing, which I'm sorry, if you are recruiting, if you're growing that fast, I find it hard to believe that the pool of investment professionals is just like going to your product. It's on average people that are less sophisticated. That is a dangerous fucking combination. That's why I'm trying to use whatever voice that I have on Twitter to say, like, do not do this shit, especially now, especially chasing froth. Like, people are probably, I don't know. I know that I said something that really triggered Mr. Lieberman once. I apologize if you have done all your due diligence and you've determined that the new price is the price to buy at. A lot of people aren't doing that. Don't play that game. That's my message.
You've got a good little charitable thing going on at the moment, Bill. You should talk about that, and I'll stick the link in the show notes again.
Oh yeah, well we mentioned it the other day. So I got Curate Retail.
Doesn't have to be
Group,
the bet, just
Yeah.
the link, so we can.
Well, yeah, we will.
Keep
But
on
the
shouting it out.
juggernaut that's QVC is up against Zoom. It was rough out of the gate. Whew.
Yeah, he took one right on the chin.
Oh boy.
That's value.
Round one.
That's value. 50% down out of the gate.
Yeah, that I didn't expect. Here, I just thought that this is kind of a cool financial transaction and a better than perceived business, and I didn't realize that Zoom would go add 40 billion in market cap on. I think it was day one.
Yeah.
Yeah, you had good timing on that one.
Whatever, that 40 billion's value, just like today's loss in Tesla's value.
I think it's funny that the trade or the bet reflected both of you. Both of you guys thought you had the best side of the bet because Austin thought that he's like, well, they're going to announce results like the next day, and the results are going to be good, and the stock's going to be up a lot. And you thought, because you're a fundamental guy, you're like, well, there's going to be 3 Christmases, so there's going to be 3 opportunities for like,
For me to win.
not knowing you're going to be 50% behind on day 2.
Yeah, that's right. Like I remember I think he said that he wanted the bet to end in like the middle of February, and I was like, no, I got to report
let it
Q4.
run.
I'm not doing this.
Just going back to what
Yeah.
JT said, this is one of the things that I've learned from being in this market for a long time is that in relation to momentum in particular, you can't short it or, just speak against it on the way up because you look like an idiot. And Tesla's a good example of that. And then when it reverses course, you can't do that because you look cruel. It's a good opportunity to be stoic.
Yeah, I mean, there's the shorts. I mean, based on the short interest that plummeted rapidly as Tesla went parabolic, obviously, they've gotten nuked too. So there's there aren't any winners here except for the people who cashed out and then probably insiders who have sold it at these nosebleed prices.
To be fair, Musk was saying a long time ago he thought the stock was way ahead of itself. So I mean, as much as I got beef with him, even he was saying yo, calm down here.
And the funny thing is, it's a much better opportunity now than it was
3x from where it still is. When he said
that's
that.
right. But at the funny thing, at the peak, right? It's from now to the peak, which is a week ago. The opportunity is so much better now because now they got $5 billion in the skyrocket. They got $5 billion in the pocket.
For him. I was right. He should have raised more. Not just
well, you can raise what you can. Right?
I know a lot of y'all knew that. I'm not trying to say I was right.
Because they've got it done at the market, which everybody was like, that's a bit weird.
You think Masa was the one that was taking it down to try to juice his calls?
Probably. Why not?
Yeah, I know. You got a bank.
I just forgot.
I'll tell you what's wild. First of all, shout out to Vitaly. He wrote a funny article. I think it was last week or whatever, when he was Tesla now has space exploration in its, embedded in its valuation. That was a good one. The one thing that I think that has really caught a lot of value guys off guard over the last 5 or whatever years, and I'm about to speak negatively of my beloved Liberty Complex, but I asked at one of those meetings whether or not Spotify, I asked I can't remember his name, I'm pretty sure his first name is Jim, but whether or not Spotify was a threat to Sirius XM. And I think that he said that he didn't think so, and that radio was has always been there. To me, it's a share of ear game, and if you don't think that Spotify is a risk, I'm not sure that. I mean, maybe I didn't ask the question the right way. Maybe he would agree to that. But just generally speaking, the incentive for some of these companies to go out and have a burn the field, just go get market share when people have such patient capital, because there is not a huge opportunity cost of capital right now. It's one of those Buffettisms. I may not know who wins, but I know to short the people in front of the train. Or at least
doesn't
get
sound
off
very
the
Buffett-like.
No, he did. He said when the car was invented,
you don't have to know
the easier bet was to short horses, right? Rather than know that which car manufacturer is going to win. So just sort of interesting to keep in mind when you're underwriting stuff.
Yeah, you didn't have to know which car company was going to win to know that you wanted to be short the horse.
Yeah.
The other thing we should mention is Tesla missed where there was some question whether it would be included in the S&P 500, and it needed its.
And by question you mean rampant speculation.
There was a lot of speculation, yeah, but there was some. It has met the technical details, which was one of them was 4 quarters of profitability, and so they could have been included. But this is one of the dirty secrets of the S&P 500. It's managed by a committee. It's not purely passive. And they've done this before. They've elected not to include Tesla, just so everybody knows. But they've done this before they did it with Google, because Google ramped and then should have been included. They didn't do it, and then I think they ended up including them 20% higher at least. It could have been 70% higher, something like that. So there's still hope, Tesla guys. They could include it. They could include it next year.
That's some meta stuff right there. If you're buying the calls to drive the share up to hope that it would get included, that's a
stock
game
market
that
operator.
you won't see this guy playing.
Fundamentals 101.
Yeah, that's stock market operations.
I mean, but the thing is, if you're playing that game, you don't have to be a fundamentals guy, right? I mean, there are ways that certain people win in that game without. Now, I will never play that game, but that would be really wild if that was a peek into what actually happened. There would be a part of me that would be dude, I kind of respect that, but I also don't respect it.
I mean, it's something. Ramp it into it.
It is something. Some Jesse Livermore shit right there.
Yeah.
All
I don't
right.
agree with you, but I respect the hell out of you.
That's right. That's exactly right. Like, I'm not getting in the water with you, but I respect the game that you're playing.
There's a meeting on 9/21 where they discuss Tesla again. Okay.
Who? Oh, the S&P?
I guess so, yeah.
Yeah. Oh, I won't hold my breath. But I've been wrong on it before. I'll be wrong again.
So buy calls is what you're saying?
YOLO calls, yeah.
Well, dude, but that's the thing, right? So the first order thought is like, oh boy, puts have got to be cheap. But that's what I was saying about vol, right? Like, no, they don't at all. This all may be priced into the option, and you may be right on the direction and just get crushed on the option trade. So do not play that game unless you know what you're doing.
Yeah, you can get it going both ways too. That's what you want.
I've tried to do
Cheap
that
and
shit
no
on
vol.
that stock. I've tried to sell iron condors because they've been like super wide, right? So I'm selling the put spread and the call spread on both sides, and then it just like blows through on both sides, and I'm like, all right, I'm out of this thing. I tried to just like harvest the vol, get screwed. Try to be long the puts, get screwed. I'm out of it. I never want to talk about it.
You can't do anything in popular stocks. That's what I've always found. Anything I ever try to do in a popular stock, I've just done it wrong. I just do it in the stuff that nobody's looking at. Kind of sometimes it works.
Yeah. I was saying to you guys earlier, for you Momo bros, Fastly is trading pretty strong today. If you like that relative strength game.
Is it trading fastly?
I think it's just playing. It's trading hardly. What's with the Lees at the end of these names?
I think that Paul Graham said it's the mullet of names. The LY.
It's like a second grader named this shit. Like, what do we want the website to do? We want it to go faster. Oh, Fastly.
Or Ify. That's Spotify.
Yeah, you buy it or you leave it.
Shopify.
Yeah.
Intensify.
The Fi's I like though. I like me some Shopify and some Spotify. The Lees, I don't know. Maybe it's just a name thing. I've never liked Lees. Actually, there was 2 Lees I liked. Shout out to the Lees out there.
Whose topic is it,
late, folks? I don't know. We've been drinking the whole time.
Bill, you want to talk about creativity? Or...
No, let's talk about slime.
All right, let's get slimy. Some veggie time. All right. So slime molds are these blobs that are created out of single cell amoebas that then Voltron together to become these slime molds. And, you'll find them in soil or in, like a rotted out tree stump or something.
Can we talk about what Voltroning together means? It sounds like they just like come together. Nice Topo Chico.
The Topo. I need the Topo.
Very effervescent.
We need to be sponsored by Topo.
It's like Coke money.
So what ends up, they're the single cell amoebas, but they join together to create these molds that like will look like a mushroom. It'll be like some of them will basically almost sacrifice themselves into this structure, so that out at the tip, they will release these spores that typically will get picked up by an insect or something and moved. And they trigger this behavior whenever they start getting low on food. And so the amoebas, they eat bacteria. So to avoid starving, they Voltron together to change and increase their chances of survival.
So they're trying to shift they're trying to move the culture somewhere else. They're trying to move the organism somewhere else. So they band together to hope that some of the genetic code keeps on going somewhere else.
Exactly. And so everyone focused on this, emergent social behavior that they're doing, and they missed the fact that there were a bunch of these little slime molds or amoebas who didn't join the mold, and they hung out away from it.
The value investors.
Everybody was wondering, like,
they all got killed.
Yeah. So there's this evolutionary biologist at Princeton whose name was Karina Tarnita, and she discovered that all of these particular amoebas would hang out, and she would go and she sampled a bunch of them and determined that it was actually like a genetically induced behavior. So, which meant that there could be some selection bias for it. So some of them, just based on their wiring from their DNA, choose not to join the slime mold. So now it seems counterintuitive that if you don't help that you're just going to sit there and starve, and like why where would be the selection pressure for that? But what ends up happening is that if the food is to come back suddenly, then these guys are in prime position because they didn't actually join the structure and harden up, like physically change shapes, so that they can't then take advantage of the new food supply. So it doesn't take a whole lot of leap to start thinking about like capital cycle theory and when does your capital allocator decide to deploy their resources. William Thorndike famously in The Outsiders was talking about how these capital allocators they're iconoclastic, and that's another word for loner. And these loner amoeba, there's a lot of overlap there. They choose not to participate in the social, what the herd is doing, what the slime is doing, and they hang out and wait, and then conditions change, and now all of a sudden they're in the driver's seat. So the other thing I wanted to talk through was Pat Dorsey has this really good slide that's talking about how that capital allocation, as like someone who's good at it, is a rich source of market inefficiency. And the reasons why are number one, it's unpredictable. So it's really hard to model a good capital allocation, if you're a Wall Street analyst. Number two, it's unconventional. So a lot of times they're creating value through acquisitions, which is not the norm. Normally acquisitions end up being value destructive for the acquirer. Number three, they're lumpy. So they'll end up with, the value creation ends up being financially messy, and it tends to come in spurts, and they'll do buybacks in big chunks, tender offers. So it's non-linear often. And then the fourth thing was that they're patient, so they're not focused on meeting short-term projections. And he ties it all together with this really nice saying that structurally lowballed market expectations create enormous opportunity. So we can almost think about our heroes of capital allocation as being the loner in the slime mold paradigm. If we really want to torture biology.
Gonna get that quote on the cover of the next book.
Yeah.
I think I love that analogy, and I think that's very apt for investing. Just who is it? Is it Pat Dorsey saying that these guys are sort of chronically, or is it Thorndike or Dorsey saying these guys are undervalued, or this strategy is sort of undervalued, the capital allocation guys?
Dorsey says that it's structurally ignored or underappreciated from a market perspective because of those traits. And then Thorndike, did a bunch of vignettes of different capital allocators and what they have in common.
I have a little bit of trouble accepting that, honestly. Like I kind of think that if these companies are run optimally, then that's about as well as they can go. And all of the outsider guys do is run these companies optimally. And most other businesses in the market are run by folks who are either not good at capital allocation, or they're more interested in making more money for themselves. Like there's just other issues rather than it being some superpower that you need to. I think it's that, Graham calls it double counting, when the company's doing really well, plus they've got management who are really good. Yeah, well, you think that they're good because the company's going well, but let's look at this thing, trough cycle, see if you still think they're geniuses then. Right.
Well, I'll tell you who is managing pretty well right now is the guys at TransDigm. I mean, they, and I think Heiko too, but like what's interesting about TransDigm to me more than Heiko, just from like a financial story perspective, is like they have so much leverage, right? So all of this, shit hit the fan in March. They went out and raised money, and they brought like $4 billion in cash on the balance sheet. And now you it has been interesting to watch those guys manage liquidity through the game and make sure, because I think I've said it before, right? But you go bankrupt when you run out of liquidity. I mean, nobody really goes bankrupt on debt. It's when you no longer have the liquidity to justify refining. And then on the back end, and Heiko could do this too. I mean, Heiko sort of does it through what I think asshole finance people would call a lazy balance sheet, right? Because it's not like super juiced
That's my favorite line. Lazy balance sheet. That's what I like. I like a lazy balance sheet.
We went to a family company once, and somebody
I
was
call
like,
that resilient.
Yeah.
Yeah, well, that's somebody was
lazy.
like, you got a lazy balance sheet, and the guy's like, I run a family company, bro. Like, it's not lazy. It's just called secure. But anyway, it's different. It's cool to watch. And it'll be interesting to see. I think they'll both have capital allocation potential on the back end of this, because I suspect the rest of the supply chain is not.
You know who also has got a
ready.
big chunk of capital on the balance sheet right now is Musk.
Yeah. So I thought you were going to say the Buff Dog, but
Well, Buffett does too.
fair.
But I was like to give Musk credit. Like he's held on until it got to this point, then knocked out 5 at the market right before it falls over. Like
yeah, good for
pretty
him,
good.
man.
Probably
that
top,
was
top
awesome.
picked it.
Credit where it's due. Yeah, he did. Yeah,
that's right.
Close.
I
Credit
like
where
Know
it's
that.
how
due.
that works? How do those at the money raises work? Do you understand the?
I mean, another question is,
They
Mechanism?
get a direct listing on Robinhood and people buy them.
well, another question is,
I hope that's not-
When did they
that and
find
the
out?
bankrupt ones? That's directly to one firm.
when did they find out
is
that they
all
weren't going to be
opinion and not
included?
factual. All opinion. This is for entertainment purposes only.
When did they find out?
Yeah, that they weren't going to be included
Friday night, I think.
after the placement was closed. Okay, fair.
That's dope. Good for him. Good move. I'll tell you what. If the stock craters and he buys it back in, ooh, that'll be. Even I'll have to. Give him
No,
props
they
on
need
it.
the money. They need the money. They can't buy it back at this point.
There's no buybacks when
Not
you have
right
like
now.
20 factories to
You
still
buy
build.
it
You don't
back
have
at
enough money for-
$70 a share.
Yeah, that's what I'm saying. Just wait until it comes in. 20% is nothing on this company.
Why
Like,
would
get
you
out
buy
of-
back your own factories when you could buy Fiat's factories for so much cheaper?
That's a good point.
I don't know, but I know that the world will give you the debt, so retire the shares.
That's a good point too.
That's your answer to everything. Just
That's
issue
right.
debt.
Then flip
Lazy
it to the
balance
Fed.
sheet.
Fuck.
Flip it to the
Flip
Fed.
it to the Fed. Yo, Jerome, I need some money to invest in China. Okay, I think we do that now.
I need some liquidity.
As long as it's through some special purpose vehicle. I think that's in our charter. Anyway, I'm getting into things I don't know about.
All right, let's get creative.
No, yeah, I've just been thinking lately, like, there's an element of investing that, is like the value bent that's like always look at the downside. But I think the other side of things is like being creative enough to see the upside when the world is pricing something as if it's going to die, and trying to fathom, like, everybody sort of understands what a Monte Carlo simulation is, but I've been trying to get my brain to think through what a Monte Carlo simulation might look like. Now, I can't do it because I'm just an idiot, right? But like, there's a lot of upside and downside possibilities, and just trying to envision the skew. And I think we saw it in mid-March, like, people that got paid certainly were helped by government action, but also a lot of it was being able to fathom that the world was not actually going to end right away, right? And seeing that we would get through this when it looked dark. And I think that you can bring that to companies, right? And like, there have been pitches that have been made on, I can't say tailored brands because I just don't see the upside there, but like GameStop, I mean, there's
Hasn't it
a
gone
way
BK?
that, I don't know, but I can't
think
see
it
that.
is.
I mean, people aren't going to go buy suits, right? But like GameStop, it's not something that I can get into, but I can understand sort of like, maybe there is a creative and, outcome in the world where, if you think your downside's limited, sometimes I have in the past underweighted the different ways that things could go. And I think that it's also important if you're buying one of these hyper growth companies. I mean, I know that like on this show, we always talk about like, oh, well, how do you know it's sustainable? But I think it's important to think through, how that stuff can happen. And I just think that in the equity game, creativity can be rewarded in a very positive way. And you got to be careful about how you harness it. But I do think that that's some of the art of valuation.
But isn't that what value investors do? Look at things close to the look like the markets.
They don't look at the right tail enough, is what Bill's saying.
Yeah, I
see.
don't know that. Yeah, I think I think that the when we're talking like value, right? We're talking like the traditional like grumpy value guy, right? And I think that
Toby's sitting right here. How are you gonna say that?
no,
I would say I'm
always
grumpy.
hate that. I always, dude, you know how I feel about you. I think you underweight your quality bent too much.
Yeah, that's fair.
But-
I like quality, but I think
That's
it's
easy
value.
to say in
Yeah.
this market.
No, it's true. But if you screen Toby's portfolio, well, the hypothetical, no, the
The
strategy
portfolio's
that Toby
okay.
runs, right?
Yeah.
The second factor that it like picks up is
It's
quality.
quality, yeah.
So it's not just like a bunch of junk.
It's because I like lazy balance sheets and cash flow.
That's right. Yeah. So lazy. I like
That's
it
where
once
you're
they
going
hit
wrong.
the refi button. Anyway. I don't actually like that. Somewhere Chris Bloomstram's like, God, this kid won't learn. Anyway. I don't know. I lost my train of thought.
I think that Burry doesn't get enough credit for his recent. I think that's what Burry was doing when he's bought calls on all the FANG names. But then again,
Yeah.
I was just sort of half shitting on Masa before, and now I'm saying credit to Burry for doing exactly the same thing. So sorry about that, but Masa, yeah, good job. But Burry,
I think when Burry did it is quite a bit different, if my perception is correct, from when Masa did it. But I don't know. Maybe not. I mean,
we
Masa
don't
might
know.
be running some big Momo game, and that might make sense.
But Burry, I read those calls on those FANG names as him hedging the right tail, which Jake and I have discussed. That might even be Jake's idea that I stole, but that's his right tail hedge.
Yeah, it's smart.
Well, and if in the economics are different of these a lot of these businesses. I mean, they're the returns to scale. And with a zero marginal cost product, digital, most of these, it is a different game. Now, I'm not sure if you're priced, the right odds for that game necessarily on any given day in the market, but it is a different game. And I think it was easy to miss that. And I missed it for a long time, probably till it was too late to do anything about it. But
My question is, if Burry's not running public money, he's just running his own money. I think. Is he running a fund? Is he running a fund these days or a partnership?
I think he does whatever he wants.
But he's got to
But I
file.
don't know.
What,
I
I
don't
think
know.
it's his money.
do you have to
most-
file
if I-
if you're just running your own money?
I think if you're an entity, yeah.
That'd be.
I
dope.
don't know though. I'm not sure.
Yeah, it seems odd. Anyway, we do know that he's filing anyways. 13 Fs are out there. If you're just an individual, why would you get the right tail hedge in? Why do you need the right tail hedge? Why would you care?
Make
I don't
money.
know. There's an opportunity cost to the world getting wealthier than you. Like in real wealth terms.
I mean, he's worth a couple of $100 million, isn't he?
Well, maybe he wants a couple hundred more, dude.
I guess. Fair enough. It's not
I
like
mean,
he's.
that honestly could be it, right? Like maybe it matters to him what his scorecard says, and he doesn't want to lose on that particular bet. I mean, this is what I go back to when I talk about incentives. Like, you got to understand, unless you're talking, in my opinion, to the person that's making the trade, and you understand why they're making it. Like, following people into stuff just isn't the game to play.
No.
Because you don't know why the hell they're doing it.
But
Like,
then there is that research that shows that the 13F investing, that does work. You got to follow all of MEB's rules, one of which is don't buy the biggest position in the 13F filing, because that's the one that they've had the big run on,
there you go.
rather than their best idea,
Yeah.
which might be
I gotta
their
start
penultimate.
listening to Meb's podcast again. Is he still doing it?
Yeah.
I assume so. Yeah, he is. Yeah, he was traveling for a little bit.
Meb, we love you. It's not that none of us don't listen. I got some things I should swap out because I do like his pod. He's got a strong pod.
I listen all
It's
the
not
time.
The Acquirer's podcast, but it's fine.
The problem is that when we went through the March lows, I think everybody sort of went, the last thing I want to do when I'm in the gym, and there's no commute, but the last thing I want to do in the gym is listen to a bloody finance podcast. I got to listen to pop music.
That's fair. That's fair.
And I haven't put them
Yeah.
all back on the rotation yet.
There's so many good ones. It's hard. I mean, you're going to feel like you're missing something important
Not here.
because you are. Yeah, you didn't miss anything important here.
At least the production
cracking
quality
myself
is
up.
10 out of 10 on this podcast.
Yep, exactly. Timeliness.
Dude, I
Comfort.
got to tell you, though, I like our pod. I know that that's like kind of conceited, but I listen to it and I'm like, man, I like these guys. And then part of me is like, yeah, this is my wife's biggest complaint with me.
Well,
I'll sit there and watch ours, and then I'll just be laughing my ass off, and my wife will look, and then she'll just shake her head at me in a very, very negative way.
It's like the story of the politician's wife. Why does it work? We both love the same person.
Ouch.
There you go.
what a savage.
Yeah.
Yeah.
That was a real quote. I forget whose wife said it, but yeah, she said that when she was asked.
Hillary?
No, it was true.
So
Anyway.
there's been a little sell-off in the market, fellas. Is it the beginning of the end?
No, dude. Inning 1.
Or is it the end of the end?
Yeah, let's get an update on that inning
Yeah.
1 hypothesis after.
I don't see this. I don't know what Barry's last name is on the Twitter machine, but I think Barry's a pretty thoughtful dude, and he went through this whole thing the other day about how like Fang's not all that expensive, and like
I
once
agree with
Barry
that.
bails,
Fang's not that expensive.
Then I'll start to say that we're at the top, but like I don't think I actually I like his feed. I think he's a thoughtful guy, and I think he makes compelling arguments for why we can go a lot higher. So until I start to see. And like Bloomberg today was like, oh, tech selling on valuation concerns. Valuation concerns are not a top.
I mean, we're well beyond
valuation
valuation concerns, aren't we? We're sort of talking technicals at this point.
That was 2016.
Yeah.
Maybe it's 2017. That was a valuation concern.
We top when this podcast capitulates and buys some of these names.
Get some YOLO calls on the Fang.
All on the sword for me.
That's right. You see me take a big position in something like Zoom. That's the top.
I have had a theory that when Tesla breaks, the whole thing goes, because I think that Tesla is the thing that is most emblematic of this market, that it's a busted growth story. Like the growth just isn't there. In the financials, there's just no growth. The financial statements are impenetrable. And it's not generating cash flow. It survives by raising capital. I don't know if this is it, but that's kind of my feeling. As to the Fang, like as I always say, Netflix is lucky to be in there, but the Favum, which is the good stuff, they've been pretty beaten up the last few days.
Good, man.
Maybe, but stop the negative free cash flow. I'll just wait.
Hey, but
just
here's
don't
the
have to
thing.
buy it
But
here.
why? Like if you're them, why would you? Like right now, like if you were running that
Because you run out of money.
Yeah, but they're not going to. That's the whole point.
At the rate that they're spending it, they might. I mean, clearly they can control that a little bit.
I think the difference between me and you two is I think that there is no end to what the debt market is willing to finance.
Well, that's fair. So,
Which
this
is absurd, but that is what I think. Like, it's not what I want to finance, but that's what I see going on, and I just don't see that changing.
That's fair. That is entirely my bias. That I like to see companies internally financed. I think that I've been in the market for long enough that I've seen those moments when big companies go to try to refinance and the debt market seizes up, and then the shit hits the fan.
Yeah, that's right. That's right.
I just would never want to put myself in that position. I would never want to have a company that does that. It just makes.
I'll tell you what. I think Netflix could do cash flow. I think they could generate cash flow if they wanted right now, as it is. But
just stop spending.
I have poked some fun at Zoom, partly because I like to poke my counterparty in this bet. But one thing that's interesting about that is you can see the cash flow inflection up on some of these companies once the growth either outstrips the growth spend or the spend sort of slows. I mean, that was an interesting peek into financials.
I think Netflix is a little bit different though, because it's the other thing. The other companies are, Microsoft has recurring revenue for one product, or one suite of products really. Amazon, absolute beast. Google, absolute monster. Facebook, similarly, a little bit more fad driven. But then you've got Netflix has kind of got this rotting produce that it produces every year that it's got to shift. And if it doesn't, it's not like none of that stuff keeps particularly well.
No, I dig. I mean, there's a very legit case to be made that there's a lot of maintenance spend in what some people would say is growth, and that, I do find it interesting that some of these like older companies, take the shot to actually invest through the income statement, and they just get the shares just get puked, and it's like, oh, earnings have been done, screw these people. Meanwhile, like some of these growthy names can just like blow capital, and as long
Not
as the
even
top
close
line is
to
going,
profitable.
people are like, it's fine. Like they're just investing through the income statement. It's like, what? Wait a second.
Has Walmart managed to transition, do you think? Has it being regarded more with like Walmart Plus and buying Jet?
Yeah, I
They're
think
still
probably now.
tipping money out the door on that thing. It's like burning $1 billion a year, something like that.
Yeah, Walmart Plus is a good idea. I don't know.
My
Yeah,
question for some
I
of
think
these
they
is
are.
like, how big do you have to get to finally get to some scale where you're profitable? Like, you would have thought it would have happened already.
Yeah, I don't know. You're talking about the globe. I mean, I
Yeah.
have conflicting opinions on this because on one side there's like the finance guy in me that wants to see the profit. And then there's the other side that's like, if I was running these companies, I would not stop pressing the advantage right now. I'd probably issue more shares than these companies are issuing. Like I'd probably try to get a little bit more cash for a rainy day. But I understand spending
Lazy
a lot.
balance sheet.
Yeah, I'd have an aggressive income statement and a pretty lazy balance sheet given the facts on the ground.
Well, that was the Bruce Wasserstein. Bruce Wasserstein, who was an investment banker, one of the great investment bankers of his day, only passed away in the last 5 years or so, I think. He used to have this talk that he would give that apparently was like, when you're trying to get the CEO to do the deal, you got Bruce in at the last moment, and Bruce said, in this industry, there's going to be one winner, and that winner's going to pay up an astronomical amount of money to buy second place or whatever, and thereafter it won't matter. And so basically, here's your moment to be great, and this is why you're going to spend more money than you can possibly imagine to do this deal. Which is great if you're an investment banker.
Well, on the other side, though, is you look at what Buffett and Munger did with the Buffalo News. Like, they basically did that to torpedo the competition out of the market, right? I mean, so if you were looking at the income statement and the cash flows, that thing did not look good for a little while. But the profit on the back end was worth it. So even those guys have gone a little bit nuts in that game at times. But, it's had to make sense on the back end.
All right, folks, throw your questions in.
Do we have Jay Powell to blame for all this shitty Netflix content? Is that what I'm hearing?
That's basically my take.
Connect the dots.
How can they spend so much money and have it all be so bad? That's what I want to know.
There's some good Netflix stuff. I haven't watched Netflix in a long time, though.
There's some good Netflix content I haven't watched in a long time.
No, there's so much shit. Why would I just wait to get the good stuff?
YouTube's free. I mean, they pay nothing. They pay it after the fact.
Yeah, that's because they load our videos with ads and don't give us anything. Send me our money, Google. Come on.
I did enjoy on Netflix recently the Inside Bill's Brain. I thought I was getting Inside Brewster's brain, but it wasn't. It was Bill Gates. Actually, it's pretty good. Pretty well done.
Here's a question. Is Buffett a dollar bear? Buffet. Phoebe Buffet.
I mean, those guys have been concerned about the deficit for a really long time, so I don't see why they wouldn't be concerned now.
He's been worried about inflation for 50 years now.
Has he been wrong?
I don't know. I'm not sure.
He wrote an op-ed for the Wall Street Journal. I forget when, but 10 years ago, 15 years ago.
I think, yeah. Was it monetary emissions or something
That's
like
it, yeah. That one didn't get much press, that one.
Somebody says here SaaS valued at 20 to 40 times. Athria? Is that Ramkumar? Okay, I'm sorry that I messed up your name. But anyway, what I would say is be careful, I think, about just looking at revenue multiples and translating it across industry. I like to price things off gross profit. It's a little bit truer to me. Like we used to bank a commodity company, so this is some of my bias, but we were sitting in a meeting and the guy was like, everybody loves revenue. If I wanted to be a $5 billion company, I could do it tomorrow. He's like, I don't give a shit about revenue. You don't get paid on that. So
sometimes you do.
Keep that in mind. Yeah, that's true. That is true.
Opinion on TLT puts to hedge against rising rates. TLT is the 10-year Treasury ETF. Puts on it, so it would have to fall. Yeah, to hedge against rising rates. I think the thing about TLT is that it tends to rally when the market crashes, and so you gotta eat that first. So
Wouldn't
TLT's
just buying
tough.
gold be an easier hedge?
Probably. Gold miners get the lever.
I think that
leverage.
idea is potentially overcomplicating it.
I don't know. There's nowhere to hide right now. It's all financial repression.
I don't have good thoughts on Discovery. I don't have them. There's something about Zaslav that I don't like.
Yeah.
I think it's his parties and his pay.
Slack as the next Microsoft?
I'm going to fade that one.
Let's just talk about the
Didn't
thesis
even
a little
take
bit.
much
Though.
thought.
The thesis would be that Slack becomes the new platform, and then you use everything else off Slack, somewhat in the way that Microsoft Windows is the platform. And I guess where do they make most of their money these days? Microsoft.
Well, it's
Excel.
everywhere. It's everywhere.
Rubisco.
I mean, it's the whole system. You got the Azure. The problem with Slack is I know a couple CEOs, not enough, but a couple, they all fucking hate Slack. They're like, all my employees do is bug me with useless stuff. It wastes everybody's time. Like, use email. Now, maybe they're stodgy old men that don't understand where the world is going. But in my mind, if you can't get CEOs to buy in, Slack's going to have an upward battle. And that is based on nothing but anecdote and probably a stupid take. So discount it for what it's worth, which was nothing.
That's a tough one.
I mean, this gets back to the question of are cities over with, and are we all working from home? And if so, then maybe Slack has some appeal in that world. And I'm not sure where I fall on that. Like, there's some pretty good arguments either way that we might go back to a more normal world when we can.
But once again, that's like the Buffett line. You don't have to know which car company's going to win to be short the horse. There are ways to short horses here without having to pick Slack. And as Dave Taggart's got it in the... I don't want to put it up because I've got a comment here I want to ask you guys about, but Teams is adding more users than Slack. I tried to use Teams. It was bloody hard to use. Slack was much easier to use. I think I had to record a podcast on it, and I did it once, and then I deleted it from the computer in rage.
From Teams?
Teams, just too hard. I don't know what it is about Microsoft. Like, they think that everybody's got all day to log in. Same with Skype, like just a garbage login experience. All right, here's a question. Why does Buffett dislike NYC banking? Bankers clearly thinks BAC will be the next winner from the banking sector. What's his analysis based on?
I don't think that the New York City thing has much to do with anything. He bet on JP Morgan, and that's a pretty New York City bank. Right? I mean, now you can say, well, he sold it, but it's not as if, like, he, I don't know. Like, it's not like he didn't like it. I think he likes Bank of America more now for some reason. Ask him.
You guys got any views?
No, I don't.
My strong opinion, and I hate going at Buffett, but I don't. He may have a good reason to sell Wells Fargo that I am completely blind to, and I'm a moron. And I will acknowledge that. Their opinion of Wells Fargo is not something that I hold in strong regard, given how wrong they have been for so long. And Charlie really went to bat for Tim Sloan, and that guy was a worthless sack of shit. I mean, he destroyed that company. And if you think I'm wrong,
that's Bill's personal opinion.
No, fuck that.
That does not represent the opinion of the podcast.
Documents. Read the congressional documents. That guy ruined that bank, and he put it in the position that it's in. That bank is not in problems because of what they did. They're in trouble because of what they didn't do to fix it, and that guy's the reason. And, like, you know what? Screw him. So... the idea that they liked him and now have some problem with Scharf, who came in and implemented a lot of the suggestions that actually address the congressional problems because he doesn't want to move from New York because he loves his family. Like, get out of here, man, with that nonsense. And now they're betting on Bank of America. Moynihan did the same shit. He didn't move down to their headquarters. And they had a lot of problems when he took it over. So I have a lot of problems with this analysis and why doesn't he like Scharf living in New York. I think people aren't seeing what's really going on, or he's not. One of the two. It's my strong opinion of the day.
Yeah, I like it. Make that a regular segment.
I don't like to go at him, and they're so smart, and it doesn't feel right. But like, I really do think if that's what's going on here, they're wrong.
Everybody else says Teams is easy to use, so I take it back. I'm an idiot. Which
I can't even sell a fucking coffee cup. I don't know. I'm sorry if I'm cursing a lot.
what do you guys think about the big oils and what components would establish a floor in value? It's crazy how small big oil is little oil now in the index.
Baby oil.
It's like 4 or 5%. It's kind of comical. Like Exxon used to be 40% all by itself.
I mean, by definition, it's got to be cheap enough at some point, right? Like, I know we're only in a compounder world, but I don't see oil going away over the next 20, 25 years.
That's basically the way I feel.
That's probably really aggressive.
I've got
I think a lot of this anti-oil stuff is like very first world looking down on what developing world needs to get better, right? It's like, oh, well, we sucked all the resources out. Now you guys have to deal with all the problems. It's like, if you were in the developing world, you'd be like, no, I'm using oil to do what you did because we can't eat.
Yeah. Nice. Very convenient of you to pull up the ladder into the treehouse
Yeah,
since you climbed up there.
Yeah. Oh, and then you want to sell me the technology? Yeah, that sounds like a great deal for me.
Yeah, you're right, though. Energy consumption is the prime mover of society and, wealth, really, and material, your experience. So the idea that, we as Americans get to have 2x or maybe even more the average human on the planet, and that's just the way that it has to be, and no one else gets to, that's pretty... It's not very cool.
That's why you have the big Navy.
Yeah.
Yeah, that's true. So maybe that's the smart move. Well, yeah, I don't know. Can you hedge your oil with defense contractors? Although it's kind of the same bet. Like, you go bomb something in the Middle East, the price of oil probably goes up, right?
It's hard to see how it gets out of its own way at the moment.
There's got to be some companies in there that have value. I mean, Midstream's got some value, I think. Buffett seems to think so too.
It's amazing how volatile oil is. So I've seen, I think in the last 10 or 20 years, there's been 2 trips to $100 and back. It's not hard to imagine that we go to $100 again. Yeah. At least peak oil thing, that was pervasive, and it wasn't that long ago. It was between 5 and 10 years ago. It was just assumed that oil was just going to get exponentially more expensive, and you had to do increasingly heroic things to dig it up, to suck it out of the deep water drilling, which is why they're multi-billion-dollar projects to suck that stuff out of the ground. I mean, do we just get really good at that all of a sudden? Surely we're consuming more than we were 10 years ago.
As a globe?
Yeah. We've got to be run.
Yeah, I think so.
I mean, maybe not right now. I don't know.
If you like a gold miner, especially we've kind of joked about this before on the show, but take a levered gold miner, and they owe dollars, let's say, and they're able to take gold out of the ground and then pay back with increasingly worthless dollars, and it's sort of an interesting thing happening there. I don't see the big difference between a levered oil company either. You're basically taking something out of the ground and you're paying back that debt with increasingly worthless dollars. You're sort of making the same implicit bet.
Somebody says here, cheap capital equals cheap oil.
Yeah, that's probably fair.
That makes sense.
Right, you get a lot of dumb guys. I mean, well, not dumb guys, probably smart guys playing a smart game, just dumb financing, to incentivize production. The one thing on Bank of America and Wells that I didn't say, Bank of America is going to have a big relative scale advantage coming out of this, and they do have more non-interest revenue. So I get the bet. If that's why they're diverting funds, I get that. I take problems with the New York thing.
I got an interesting one here. What do you think about Ackman's SPAC buying Bloomberg?
There's only one place for Bloomberg. It's
Berkshire?
Yes.
But he doesn't get to do you don't get the silly premium if you sell to Berkshire.
You might for that business.
Does Bloomberg care? he's like, it's $45 billion. If it's 55 or 45, makes almost no difference.
I mean, look, if I was Bloomberg, I would really sell to Buffett 100%. I mean, I think it's the perfect asset in that entity.
What about baby Buffett into his SPAC?
I mean, I got love for Ackman. I would not trust that Ackman would allow my entity that I built to be run in the same way that it has been built, in the same way that Buffett would.
Why would Bloomberg ship it? Only if he was trying to run for president, right?
Well,
How much-
I mean,
how
after
much
Trump,
money
why
is in
sell? Just put
Ackman's
it in
SPAC?
some blind trust.
Yeah,
The
not
Hack
enough.
Attack could raise the funds.
You'd have to raise more, but I think he's got 4 in there at the moment, right? But if you say we're doing a deal, we're buying Bloomberg, we're going to go back to the market for another 20, you probably get that done.
You can raise it for sure. I'm
ask
telling
Uncle
you, that
Jerome for a
asset
loan.
belongs in Berkshire. It'd be a great
Berkshire's-
business.
Probably. I mean, it would be a nice cap for Bloomberg, but why would Bloomberg sell at this point?
Yeah, I don't think he will.
What are you going to do? You like, the only thing, the presidency was the only kind of the only like, it's probably a step down, but like the only possible job that he could do that's not running Bloomberg would be like, it probably wouldn't have as much influence.
I guess if you were him and you wanted to leave your family a more diversified set of assets, I think that there is one genius in the entire world that can figure out how to get that done for you and minimize your taxes, and that's Buffett.
Yeah, flip it into get it back in Berkshire stock. That's a no-brainer, right?
That's right. You can get it pretty tax advantaged, and you basically put your family into a S&P fund with a really, really good capital allocation.
I mean,
that is what I would do.
To be fair, though, it's not like Bloomberg's descendants are going to be ruined forever. Like, even where they are now, his grandkids are going to be
no doubt
idle
I'm
rich.
just telling you what I do.
So there's the question that everybody wants to know, Jake, Moustache, you've gone full lumbersexual. I liked you. We had Sergeant Detective Jake from the Sacramento PD on last week, and
Yeah.
now you've gone plaid.
I'm Lieutenant Dangle right now. Yep.
And on that note, folks,
What was that show on HBO with the? It was like kind of weird. You could be on that show. You're creeping me out a little.
I think it
like
looks great,
but you're
mate. I think it
creeping
looks
me out.
great.
Yeah, I mean, like for
It
entertainment.
might only
Don't
have
stop
like
it.
one more week left in it. It's there's a fair amount of itchy factor. I mean, it's not long for this world.
Grow it out.
Yeah.
Make it big. See how big you can get it. You're not allowed to shave it until value starts outperforming.
Oh Christ! This is
Do the Jesse Felder. All right, fellas. We made it. Sorry, folks, we were running so late today. That was entirely my fault. Turns out you got to reinstall everything when Skype updates, and Skype updates every week. Every time I turn it on, new version of Skype.
every hour.
Every hour.
Don't expect us back tomorrow at the right time, or next week.
We're gonna try.
Yeah, but just carve out a couple hours.
Yeah, we're like the cable guy. I mean, from like 8 to 5, keep that window open.
That's right. We're live somewhere between 1 and 4 Eastern.
All right, folks. That was fun. Next week. Ciao.
Take care.